Guys, thanks for joining us here in the charts. It is the Market Beast, Napoleon Macro. You may be in for it from a pretty controversial, somewhat thumbnail. It says, is the S&P 500 forming a bearish pattern with a green outline? So that I have information for you if you are bearish in this market, and I have information for you if you are bullish in this market. So please listen until the end. I have a pattern that I would like to reveal to you. I would also have to reveal the potential bullish case if you are bullish in this market. So let's make it short and sweet and get right into it, guys. Welcome back, loyal family. If you're new here, we only explore price action. Thanks for sticking around, all my loyal subscribers. Let's dive right into the charts here. Showing. All right, so today's March the 11th, 2022, and the current price of S&P 500, $4,246.20, fluctuating slightly negative 0.3% for the day. Okay. All right, hopefully you guys are doing well, executing your strategies. All right, there is the bearish pattern that I found, arbitrary or not. Please keep in mind this is an active pattern that could be legitimate, and maybe it's inaccurate. The way that you determine whether or not it's an accurate pattern or not is the actual breakout. The breakout level is actually going to be the neckline. If you're new to like patterns, again, if it's a legitimate pattern, the neckline, that's the breakdown. Okay, so the neckline is going to be near the 4,100 and about $41 level. But I've been following the S&P 500 on the weekly candles, and if this is an actual pattern that's going to break out to the downside, I think it's going to be more like a gap down situation. Please, guys, do not enter this market based on me saying this is a bearish pattern. I typically enter the market near the resistance level of the pattern. So am I getting short here? No, I cannot get short here. Why? Because the market is moving lower, and I typically have my best entries on the bullish counter move in a bearish trajectory. And we're actually going to go over that here in 1 second. So I just wanted to show you, if you are bearish in this market, there's a pattern that I found. Please use your sim account only, because this is not financial advice. Technical target, the way that you get the target is really simple. You take the neckline, and then you measure the highest point of the head in the pattern. And then you just take a little simple trend line, and that's how I was able to get the technical target down there. That again, I'm going to get some interesting comments if the market moves up next week. This is not a breakout, guys, but the technical target is $3,700, and that's how you find the technical target if you're new with us. And I explain that a lot on the channel, okay? But let's get super practical here, and let's all understand that the S&P 500, as well as the overall market, is still in an overall uptrend. I'll do a very brief example of that so that we're all clear on why I say the overall market is still in an uptrend. We're going to measure from all the way back in March 2020, and I just want to make it like super simple for everyone to understand, okay? So this is an uptrend. So let's just align that with the green box for, bullish purposes, I guess. So we're going to make that green. So this is an uptrend. I think I kind of like 600 and just over 600 days where the market was making higher highs. Hopefully you guys can see that. Let's change the time frame very quickly. I don't want this to be a long video, guys. So just simply looking at higher highs, higher lows in the market. Yes, higher high, higher lows. So it's pretty simple to see that this is an uptrend ever since March 2020. Okay. Now the way that you verify a downtrend is really simple. You just look for the opposite. Okay, lower highs and lower lows. So we're just going to go ahead and outline the downtrend, the current downtrend. Okay, in comparison to the uptrend. So when I say the overall market is in an uptrend, hopefully you guys don't shoot the messenger. I'm just being technical here. The overall market is up, and this is our downtrend that started back in January the 4th-ish, 2022. Okay, the downtrend started, since this is the highest measurable point, okay, January the 4th at about 4,800. The market has been making lower highs, okay, low up, lower high, so we can verify. These are verifiable lower highs, okay? But again, if you zoom out, okay, this is the uptrend in comparison to the downtrend. So even someone who has no idea about price action can clearly see that the 600 is something uptrend that we have been in comparison to the downtrend that has started back in March. So we're less than however long that is, guys, from January the 4th to present day. That's how long we've been in a downtrend, okay? So I did say I have information for the bears. We've covered that. And hopefully that information explaining the uptrend in comparison to the downtrend is helpful. Now, here's how you find a sign that there is financial interest, that the buyers are attempting to step in, okay? When you verify the downtrend, which we have already done, we just verified the lower high, and the lower high, you just simply look for the opposite, guys. You look for higher lows. More specifically, I'll just draw it out for you. You're going to look for a double bottom, okay? Double bottom. Or, okay? Or you're going to look for a higher low, okay? Whether it's a long-term downtrend or a short-term downtrend. Those are the two things that you look for to find evidence of your opportunity to enter the market on your SIM account, okay? So I'm bringing that up to your attention because since we did verify the short-term, potentially long-term downtrend, okay? Again, guys, let's get super practical about this, okay? We just found evidence of low and a higher low right there, okay? There's a, higher low right about there. So since this is a measurable higher low, and I realize, again, guys, we've been following this on the weekly. I realize this is the kind of the short-term observation here from the daily candles, but I cannot ignore what I see on the charts. And on the charts, it is showing me that this is a technical higher low. So here's where the strategic buyers step in and they have their measured levels. It's really simple how they determine their targets and their stop outs, right? You go to the previous swing high, which naturally, if the market finds a higher low, if it is in an uptrend, it attempts, in some cases, not all cases. So if this doesn't happen, no need to say it didn't age well. It's just I'm being technical and letting everyone know how you measure and how you always look at the chart every single day so you're not confused about what you're looking at, okay? So the technical target for the short-term participants would be right at the $4,400 level, because what they're trying to do is get in at the best possible price near the double bottom or higher low, in this case, the higher low. Since the market is in an overall uptrend, they're going to attempt to play the market to the previous level of resistance, because if the buyers are here, the financial interest that has just stepped into the market that we're able to verify, right? These are candles that have closed. If they're able to successfully capture this price near these current levels and actually break above the previous level of resistance and then use it as support, that would be evidence that the uptrend is attempting to turn around from this short-term downtrend and continue the overall trend to the upside, okay? So again, hopefully I have the information for the sellers. You have the pattern. Hopefully I have the information for the buyers. Let me just kind of give you guys the levels if you are interested in going long on your SIM account, of course. All right, so again, the target will be the technical target, right, for the short-term participants, 4,400. Of course, you pull it up to that 3.0. And so your stop out would be near the, I can't get it there. All right, right there. Oh, it's somewhere near there. All right, so the stop out would be 4,900. About $3, 4,100 and about $93. Okay, the entry would be right near the current level, and of course you'll play it to the upside. And again, this is so short term. Like if you're a long-term investor, just kindly ignore this, because again, I'm just going over this for the short-term participants who like playing in their SIM account. It's a 3.7% move to the upside at about $4,400. And of course, the risk to the downside, it will be about a 1.1% risk to the downside, 1.3%. Okay, it's like a 2.1-ish risk to reward, 2.19 risk to reward. Okay, so that is the information in the charts. One may say it could go up, it could go down. Genius. It's actually it's. I would say yes, you're correct, but I'm giving you strategic levels if you're going to play it to the upside, because if ever you're investing in the market, you always have to invest in an amount that you're comfortable with losing all of it. So let's say the market actually gaps down next week, right? You're only risking an amount you're comfortable with losing all of it. So you took a calculated risk, you got stopped out or destroyed, right? Because it gapped lower. but you still win because you had a strategy and you followed through with said strategy because you found evidence in the charts that suggested that it was time for you to execute your strategy by way of a higher low in a downtrending market, a short-term downtrending market that started back in January, right? And that's basically how, that's how I play the markets, guys. Am I going long here? No, I'm not going long. I'm just letting you guys know that this is the information if you wanted to go long. This is the information if you guys are short in the market. All the information is there. What do I think is going to happen? Well, actually, hopefully, right? Hopefully we can actually get a push to the upside. And here's the last thing that we'll go over and we'll close it out. Here's a 50 on the 200 exponential moving averages. It's technically not in a bear market yet. It looks like it's approaching, right? You see the 50, the green line has to cross below the red line. The 50 exponential is a green line. The red line is a 200 exponential moving average. Once you get that cross, right, the green line crosses below the red line and the price action is taking place below a minimum of the red line, right? Then that is a technical bear market. Yeah, just kind of, technically speaking, okay? So what I enter the market, I would only bet against this market if there's a bullish counter move next week, okay? And I would have to identify reversal candles. Like if it pushes up to like $44,400 and I'm noticing weakness, yes, I will likely be entering the market to the downside, okay? But like as the market is going down right here, right now, guys, I cannot do that. My strategy does not suggest that it's time for me to bet against the market at these levels. So I'm going to follow through with my strategy, and that is to do absolutely nothing at these levels, okay? Hopefully this is helpful for you guys. Hopefully you enjoy that. Hopefully this wasn't too long. And that's how we're going to end the video. And again, guys, hopefully you guys remember us going over the potential bullish counter move. If ever the cross is approaching, in some cases you get that bullish counter move to attempt to save the trend to the upside. All right, just information, not saying it's going to happen. All right, guys, so do me a huge favor before you go. That's the end of the video. Simply leave an appropriate thumb. I would appreciate it below the video. And also leave a comment so that the YouTube algorithm can promote the video. If you guys are new, we also explore the alternative markets if you're into Bitcoin and just Bitcoin for now. So you can kindly join us here on this interesting journey, and we'll send that out to you momentarily. I'd like to take this opportunity to thank you all for your time. Remember, always have a strategy, guys, okay, before you enter. Keep that positive energy flowing. We'll talk soon, and bye for now, guys and gals.